I see all the time that people think because they don't have receipts for items that they can't deduct it. But we have something called the Cohen rule. So even if you paid for things with cash, you don't automatically lose the deduction. Obviously, you have to have some corroborating evidence, or if you have something that maybe you bought 10 years ago and you turned it into business use, it's probably going to be the fair market value.
So there is something called the Cohen rule. So it's COHAN, not EN. What it is it's basically an equitable doctrine that tax court is allowed to give you, not something that you have this right to, but something the tax court says, okay, it's unreasonable to say you didn't have any expenses. So if you can essentially reasonably show us that you had it and have a reasonable estimate of it, we will allow it, but it's not intended to be something that you can rely on offensively against the IRS. So it is really a use at the last resort, and you want to keep the receipts ideally so that you do have an offensive argument against the IRS. And for more accurate tax advice from a tax attorney, subscribe.